Alright, what's up guys? Right, so today I'm just going to show you how I was able to make 124 pips on this pair. Yesterday, what was the date again? Must have been, yeah, the last day of June, 31 June. So I'll just show you how I was able to catch 124 pips a day. Guys, remember to like and subscribe. Remember to even share with other people if you think this strategy works for you as well. So this is how I was able to do it. As you can see, I took my trade here. You'll see on the lower time frame, but I'm just going to show it on the high time frame. I trade here, and my risk was very low. It was less than 20 pips there, and I got it all the way here. This red line here, 121 pips, but it was actually 124 pips. So as you can see, this move over here, this is what I caught. So I think the first thing that I have to point out here is that I looked at my market bias. If you check out my previous videos, I always talk about market bias and how that affects your trading. So as you can see, our market sentiment here is it's bullish, right? You see that it's bullish. It's been bullish, and as you can see, we had this slight break of the channel here, but I disregarded that because this trend line is a funny trend line, and this is just a bullish market over here. So I disregarded this trend line break over here. I'll have to see this coming week, whether I should look at it or just move it further here, this trend line. So market bias was the first thing that I noted, that the market is what is bullish, therefore giving me a higher higher percentage chance that this trade will be successful. And then if you check the daily over here, you see that I had my trend line here from here cutting across here. So what I did notice is that there was a channel break here for this channel here. Okay, let me just point it out clearly so that everyone knows. Come on. Right, so my trend line there. Right, so this is the channel. This is the channel I'm talking about. Was broken here. As you can see, price actually moved up a bit, then it retraced. So if you check out some of my other videos, I talked about this retracement that happens with the channel breaks. Just go back and watch the other videos, you will see that explanation. So there was this pullback here. As you can see, this pullback. Okay. Right, this pullback from here to down here, this pullback. So I was sure, given that my market sentiment was bullish, my market bias was bullish, and then there was this pullback. All I just had to do was find a hook point, what I call hook points, a place where I can take my trade. So my most significant hook point was this point here. So you can see I placed my horizontal ray line, and I was able to put my rectangle here just to cover the full zone, which I was expecting a market reaction, and I got my market reaction here. The market reaction which I was looking for was the tweezer, the bearish candle and the bullish engulfing candle. That was the market the market reaction which I was looking for. And then I also got the retracement after this 4-hour bullish candle. So that's when I was able to go down into the lower time frame. So this over here was the retracement on the 15 minute, which I'm talking about. And as you can see again, so it's basically the same thing that I'm doing for my higher time frames. to lower time frames, it's basically the same analysis. And I looked for a hook point here on the lower time frame. This was about a 50%, 38% retracement. So I took it after I saw again. This was after I saw the bullish engulfing tweezer again. So this is where I took my trade. I took my first trade here. But obviously I don't take one trade, I take multiple positions. I take multiple positions. As you can see, this is how I took it. And yeah, so it was nicely 124. It's about 117 thereabout, just in excess of 100k, 100 pips. So I took it there, and then it started moving up. Then when it got here to this point here, what happened here is that it reacted to this level here. So I was a bit panicked, but I held my position. I didn't put in break even yet, so I waited for it to pull back. As it pulled back here, added more positions, and as it went up, yeah, let me show you. As it went up, it came here about 49 pips. So my rule is that after like 30 pips I close a couple of trades. So here at this point, seeing that it was reacting to a trend line here, I closed most of my positions, and I was just left with a few positions here. So most of the profits were closed. Then, as you can see, price then moved back down. It retraced again. So it was at this point which I added more positions. At this point. At this point, as you can see, it's just another zone. So just another hook point zone. Basically, let me show you. Just another hook point zone there. So noting that, I added more positions here, and then that's when it erupted and it went what? It went up. To complete the setup. So here my setup was in two. There was the channel break here, the 90% rule. That's what Falcon Max calls it in Falcon, the 90% rule, which got here, and yeah, so that was completed. And then there was this W formation here, which was also confirmed and completed. This W formation here, which was also confirmed and completed there. So it was two setups basically that were two confirmations, major confirmations that were completed in the setup, and that's how I was able to get 124 pips, 118, 17 thereabout. Yeah, so that was that. I think this was one of my biggest trades for the week, but obviously they were the gold trades. Right now I'm not talking about gold. I talk about gold a lot. Obviously gold was the more significant, but in terms of other pairs, GBP card was the more significant one, apart from gold. So yeah, guys, this is how I was able to catch it. Just rewatch the video again if you think you haven't gotten it. Enjoy yourselves, guys. Remember to like and subscribe. Remember to comment. Yeah, I think that's it for today.